Morning to both you gentlemen, and Kunal, first up I'm going to come to you. I remember there was a note circulating in the market on Friday where it said that Nifty levels are expected to come at 21,500, and not a lot of people who are believing that note, but see, we're almost at those levels right now. Kunal, where is the support, if at all, right now? What are the levels that you are spotting for Nifty, and how long do you think this tariff-induced pressure is going to continue for our markets? Because largely, we're just we're stuck in the crosswinds between US and China. How bad is it really? And do you believe that the markets, this reaction that we are seeing, is it a sort of a knee-jerk reaction, or is it warranted to the kind of market movement that we're seeing globally?
Good red morning, Snehi, as well as to Gaurang and everyone. Yeah, I believe it's a very pertinent question, especially at this point of time. Now, I'll look at the market setup more on the statistical basis. One, for example, is we should not be looking at levels per se, because when there is panic across the globe, and I'll use the term panic because we've seen that kind of a panic reaction across equity, across various asset classes, bullion, bitcoins. I think nothing has been spared in this kind of a sell-off. And I think that's where you are expecting that the markets would go into more of a relative comparison with respect to the rest of the globe. So for example, if say most of the global markets, say in the next couple of days, if they start to stabilize, then it's possible that our markets would also follow a very similar kind of a price trajectory. Our markets so far on a relative basis in the last 10-15 days have reacted much better. So we are into a very mature phase of a price action for our markets with respect to the global asset classes. For example, in the last 10 odd days, we were looking at the data that Nikkei has lost almost 20-25% in just the last 10-12 days. Dow has fallen by more than 10-12%. Russell 2000 has fallen by more than 15%. As compared to our markets, where you add up the last 8-10 days, we are down just 7-8% for the indices. So that itself indicates that our markets have been a lot more resilient with respect to the entire fall. But yes, the fall can exacerbate if the global markets go into another round of a correction. Difficult to anticipate that at what level this price trajectory could stall. But the second and the most important data point is that we are now falling into those bands where I call it as those extreme bands, the 3 sigma Bollinger bands for many global markets. And historically, whenever that has happened for 2 or 3 consecutive instances, we've actually seen the index stabilizing post that. So I believe that difficult to anticipate what could happen in terms of the tariff news flow. But price wise, I think over the next couple of days, we could be in for a near-term bottom, at least for the indices.
Bottom is what Kunal is spotting on the charts. Once again revisiting the market, 22,000 is where we've managed to reach right now for the Nifty. So that's where we are at. And Gaurang, welcome to the show as well. What's your outlook when it comes to the markets? And do you believe that this correction that we've seen today is the worst that it can get? Do you believe that this provides a good buying opportunity right now, or would you still adopt a more wait and watch sort of an approach right now?
Well, first of all, morning to all the viewers of ET Now, my good friend Kunal, and to everyone at ET Now. Look, it's going to be very difficult to preempt any kind of situation in this kind of a market. And that's primarily because you are not at the end of the news flow as far as the tariffs or reciprocal tariffs are concerned. And the President of United States, Mr. Trump, has himself mentioned that going into the future, you are going to see more tariffs coming through. How, when, in what form, how much, and in what parts, it's something that we'll react to as we have clarity on that. But if you are an investor, I will concur with what my good friend Kunal has just mentioned, that we have been relatively in a better shape. Our GDP is at about 6.2 or something more than that. On 9th of April, we are going to witness the credit policy just day after tomorrow. Expect a 25 basis point cut, but it is going to be very prudent to listen into and to read into what the Honorable RBI Governor is saying in terms of our economy post this reciprocal tariff scenario and the world order altogether. Dovish commentary is what we expect. Earnings could be a silver lining in form of fourth quarter earnings, which are going to be a curtain raiser from 10th of April onwards. TCS will start the show with fourth quarter earnings, and then the rest of the crowd will follow. If that is better, then I think that should possibly save face for us. But to say that we are at the bottom of the market in this kind of an eventful environment, it's going to be very, very difficult to preempt. But if you are an investor, I think it is time to primarily look at sectors which are going to be relatively insulated to what is happening around the world and the tariff and the hanging sword from the America. So you have power generation, you have hospitality, you have cement, you have capital goods engineering, you have defense, you have pharma, of course, not to forget that, when along with diagnostic and healthcare hospital sector. These are some of the places where I think you should possibly focus on large cap first. And then if you understand the mid cap universe, then you can act accordingly. But phased out portfolio building exercise, I think should be initiated at this level.
Okay, so that's the take coming in on what the strategy should be going ahead from now, given that the market has been so volatile, especially today, but also for the last couple of trading sessions. On that